You ever see somebody start a race and they fall like within the first couple steps right out the blocks? Well, that's what's happening right now with interest rates. Happy New Year. This is Larry Gonzales from Aligned Mortgage, and I'm here with my weekly update on the mortgage and the housing market and how it affects you. All right, before I get on with this, please like, subscribe, or comment. But let's get going. New year, new beginning. What's going to happen in the housing market? Well, if the first week of January has any say, it's going to be a wild ride. What's going on right now? The big three, right? Interest rates, inventory, and housing prices. Interest rates, they've gone up this week. Why are interest rates going up? That's a great question. Yesterday, the Fed released the minutes from its meeting in December. And in its meeting in December, it said that in conversation that because inflation was high, they were going to take action sooner to stop inflation. So the minutes came out yesterday, and the minutes said something that was a little more drastic than what we heard in the reports coming out of the meeting in December. So the Fed is tapering its mortgage-backed securities, purchasing mortgage-backed securities. At first, they said they were going to do this over probably a 3 to 6 month period. In December, they said, "No, man, we're going to be done. We're going to double our effort, and we're going to be done tapering, and we're going to be done purchasing new mortgage-backed securities and treasuries by March." And we also anticipated that the Fed would start increasing the Fed fund rate probably April-May timeframe. But based on the minutes, there's a 76% chance that the Fed is going to start increasing the Fed funds rate starting in March, and there could possibly be 4 rate hikes by the end of the year. All right, and then the biggest thing that is in Fed, one of the biggest reasons why mortgage-backed securities and interest rates are going up is because typically the Fed, they have basically $8 trillion invested in treasuries and mortgage-backed securities. And every month they get, it's kind of like your checking account or savings account, you get your interest payment every month. Well, it's kind of the same, except they're getting $70 trillion a month. And the Fed is going to reinvest that. Like we mostly reinvest our interest or our dividends and whatnot in our stocks. The Fed typically reinvests its treasuries and mortgage-backed security gains back into the market. Well, they're talking about stopping doing that and kind of weaning off, not all at once, but stopping reinvesting their mortgage-backed securities. And why is all this happening right now? It's a new year. Why is the Fed doing that? The Fed's doing that because inflation is high. All right, inflation is at 6%, and this is based off of November readings. That's about a 40-year high. They got to get that down. At the beginning of the pandemic, and certainly through most of the pandemic, the beginning of the pandemic, our inflation rate was below 2%. The Fed had a goal to get us to 2%. Well, they lost control, and now we're at 6, near 7%. So that is having a big effect right now on our interest rates, and that's why, at least in the short term, for probably the next 3 to 4 months, we should see interest rates that are higher than what they've been in the past, past couple of years. What about inventory? Well, the HBR, the Honolulu Board of Realtors, will come out with their housing report for the month of December, and then that will tell us kind of where the inventory was at. But I'm kind of a guy, kind of like I see inflation because I don't want to pay more for gas. I see inventory going up because I see more houses for sale in my neighborhood. And that's kind of what I'm seeing right now. I'm seeing a few more. And I think as we get closer to PCS season, we will begin to see a lot more homes go for sale because they've had incredible gains over the last 2 to 3 years. And they're going to take that money and they're going to run because it's easier to do that than it is to manage a property. It's less stress, and you can free up your VA benefits, certainly if you're a veteran and you own a home. So I expect inventory to start going up here in the short term, and certainly go up as we get closer to the PCS season. Appreciation is slowing down. Homes are not depreciating, but the rate of appreciation is slowing. So, and the prognosis for the rest of the year is going to be, I'm seeing anywhere from 5% appreciation year over year to, the low teens rate of appreciation, which is kind of a little closer to what normal is. Certainly 30% appreciation year over year is not normal, nor sustainable really in any economy. So we should see a move back to normalcy with regards to appreciation. Here's the last thing I'm going to talk about today. There's some huge news that came out this week. All right, the Federal Housing Financing Agency, or the FHFA, they have been tasked by the government, by the president, to make housing affordable and available to first-time home buyers. All right, and so what they have done is for high balance loans, and this isn't really going to affect most first-time home buyers because most aren't buying high balance homes for their first home, but for high balance loans in Hawaii, that's anything over $970,800. All right, there's going to be a 0.25% to 0.75% fee added to the cost of the loan, depending on the amount of your down payment. Okay, so that's going to make it more expensive for people to buy larger homes with conventional loans. This does not have any effect, all right, on government loans, so VA, FHA, or USDA. For those who are buying basically high balance loans, conventional, it's gonna cost you more. All right. The other big thing though was the FHFA is levying a fee for second home purchases. Okay, so there's been a lot of investors coming out here swooping up properties. Well, it's going to cost anywhere from 1.125 to 3.875% more in basically rate cost for somebody to buy a second home or an investment property, and that all begins on April 1st. So this is good for first-time home buyers and really good for buyers who have a VA home loan benefit. That news for the housing is great for veterans. If you're a veteran and you have not used your VA home loan benefit, or you're thinking about using it again, or you know somebody who's in base housing, because I know, and there's a lot of stress by people, for people who are living in base housing, especially near the Pearl Harbor area. We have a free VA home loan seminar this Saturday at 10 a.m. It's virtual. If you want to go, click on the link below. We'll get you signed up, and you'll see me there because I always moderate them. All right, that's it for the Mortgage Market Minute. Hope you had a great holiday season. I'm so looking forward to being with you all through 22. All right.